This is a special edition of Real Life Architect, and today I'm with Pat Cannon, who is a financial advisor. So, Pat, tell me a bit about yourself and what you do.
Well, I'm a mortgage broker.
You're a mortgage broker.
Am I speaking to you?
Let's just talk to each other.
Right, so I'm a mortgage broker. So clients come to me when they need a mortgage for whatever reason. Can be for residential purchase, can be for buy-to-let purchase, can be self-build.
Yeah.
Or renovation.
So if I had a client who wanted to build a house extension or to alter an existing property, you could help the finance with that.
Correct.
So that's what we're going to talk about today. We're going to look at this in 2 seconds. We're going to look at what it takes to finance a self-build house in the UK, the grand designs idea, or how do you go about financing an alteration or extension to a home.
Okay.
So we'll look at that in 2 seconds. So I've been naughty. I'm not showing you this, but I've got a scenario. I've got a scenario here.
Oh, that's good. Come on.
Okay. So let's talk about, let's say you're approached by a client who's looking to self-build, right? Let's call him Dave.
Okay.
Dave is 40 years old, owns a house worth £250,000.
Okay.
He has a £100,000 balance on his mortgage. He's got 100 grand outstanding on his mortgage.
Okay.
He's got 150 of equity in the house. He also has £100,000 in savings.
Okay.
Right. Dave has identified a site for sale with planning permission. It's going to cost him 100 grand. Let's start with the site. What is the best way for Dave to finance purchasing that site?
Right. Well, there's 2 options for this. Right?
Okay.
So if he buys it with his own money,
Yeah.
then he owns it, he can buy it, and he doesn't need anything further to buy it
Okay.
with his own cash.
Yeah.
Now, if he comes to me and says, right, Pat, I want to do this, but I don't want to spend all my money on it, then we can get him funding to buy the land.
Okay.
Not an issue with that.
So is that like a mortgage or just a loan?
No, it's a mortgage because it's secured against the land. As soon as it's secured against something, it gets the title mortgage. So that gets secured against the land. Now, depending on the lenders and what lenders are offering at the time, you can get anything from 75% to the value of the land, 85%, and I believe there's a couple of lenders now doing up to 90%.
Really?
Yeah.
So he could borrow £90,000 against his £100,000 site?
Yes.
Right. Okay.
However, to do that, you don't just need planning permission. So before a lender's going to say, here's money to buy the land, they have to take it as a full package. So they don't just assume you're buying the land, they assume you're going to build a house on the land.
Right.
So to raise money on that land, as well as the planning permission, which obviously you need to have, he then needs to have architect drawings for the property he's going to build, and he needs a full costing sheet for building that.
From a quantity surveyor or someone similar.
Yeah, or is...
that registered builders sometimes.
Correct,
Yeah.
right?
Yeah.
But it's the full in-depth one. It's not the back of a cigarette pack
Yeah.
will be 40. It's not, it's the full. So, if you think about it stupidly, logically, to then buy that land, he needs to spend money before he buys it.
Yeah.
Because he needs to come to someone like you and say, this is the house I've got planning permission for. Can you do me drawings? And you'll say, yes, I can. That'll cost you X amount of money.
And we get a QS to price it all up, and so we have a bill of quantities that says this is what your job should cost you to build.
Right.
Good.
Right, then he needs the full breakdown of what it's going to be. And I do mean literally plasterboard, nails, whole thing, full down. Now, if he brings all of that to me, so he's now spent his own money, quite a chunk of his own money, by the way, before he's bought that land. So we have to assume the land's going to wait on him. So whoever's selling the land's going to wait on him doing all of this.
Yeah.
And then if he comes to me and says, right, this is the bit of land I want to buy and I need help buying it, I've got my planning permission, my drawings, and my full costings. And I say, well, okay. And then we have to look at his finance to then build the house. And again, we can get the land, but you still have to finance the whole house. So there's a whole conversation about, okay, where are you going to live while you're building this?
Because you're assuming, because he has a house in this scenario with 150 grand of equity in it. So one of the questions I've got is, when does he sell this house? So getting a rental property, it's assumed that's easy enough to do, but at some point he's going to have to get rid of this house.
Correct, it has to go. So I would always recommend it goes early as possible, not later. Now, if he has a mortgage in place on his own property, and we have some cash to get us going, he's still going to need lots and lots of his own money to do this, because you need to be paying for things on the go. The lender's happy to give you money on the self-build side, but you need to spend so much of your own cash to do this.
For professional fees, like for architects, QS.
Everything that needs to be done.
That raises another question. So that's interesting, that because I didn't realise you could get money to buy land.
Yeah, as long as you've got all the other paperwork for all the rest of the house.
So it's not just the land, they want the whole package.
I have been asked, people have phoned me up and went, can you get me a loan to buy a piece of land? Of course I can. You're going to build a house on it? Yeah, not yet.
Right.
What do you mean? I've just seen this great bit of land. It's lovely. I want to buy it. And then maybe in 3 or 4 or 5 years I'll build it. Well, I can't get money on that.
So you've got to get all your ducks in a row before you even attempt this.
But there's no loan
Right.
to allow you to buy a piece of land that you're not going to do something with.
Right.
If you've got your own cash to buy a piece of land, fantastic.
Yeah.
That's not concerning anyone. But if you need to put a loan on it, there needs to be a line all the way at the end.
Yeah.
Oh, this is what I'm going to do. This is what I'm going to build. And
how long would that process? I mean, I know how long it would take me to design out, say, to a construction drawing standard, which is what the quantity surveyor is going to want. The quantity surveyor can't price a build of planning application drawings. They're too vague. It doesn't tell you what it's built of. There's no structural engineer involved. So you're looking at many thousands of pounds of my fees, the structural engineer's fees, and the quantity surveyor's fees to get to what would be deemed enough information for a QS to give an accurate pricing for the plasterboard.
Exactly. Yeah.
So I know that might take me, let's just say 2 months to clear my desk and get everything done, go back and forth, get it all done right. How long is it going to take the bank to organise the funds and for you guys?
That's actually not that bad.
Okay.
If you've got all that paperwork. It's
right.
only when, if you say to me, I've got that, and then when the lender says, Brian, can I have that?
Yeah.
And the client then goes, well, I haven't got that. Well, yeah, I need that.
Right. So this process could play out over a long period if you're not organised. I didn't realise that.
If you come up and go, I've got everything you need, because I've spoke to you. See, this is where someone really needs to speak to someone like me before they do anything.
Yeah. And I say the same thing to clients as well. I get people phoning up, I'm thinking of doing X, Y, and Z with a house. Right, start talking to me as soon as possible, because they will have planned things out or imagined that they could do certain things that they can't. The sooner you start talking to professionals like Pat or I, the better this is going to be in the long run.
Because the worst that happens, as far as I'm concerned, is I can spend a couple of hours with a client and I don't see him again. But I'd rather we did that than someone phoned up and said, I've done this, and I come in and you go, have you got all of that? And they go, no.
Yeah, so you could give a client like a checklist of things they will need to do.
Yeah.
That.
Happy to do that.
Yeah.
Happy to sit down with someone and say, do this, do this, do this, do this. Do you know the best phone call ever is when someone phones you up and says, I own a piece of land. And I want, and you go, oh, that's brilliant.
Because I advise people, because I've seen people who are, they've got plenty of cash and they will have bought themselves a piece of land. No planning, no, there's just a farmer's field, right? Or a brownfield site somewhere. And they'll think, that's a brilliant site. Now let's start. That's a disaster. Because particularly if you're trying to build something in the middle of nowhere, the odds of you getting planning are very slim.
Right, okay.
Right, it's really hard to do. A lot of Scottish local authorities that have lots of rural area, like the Borders or Perth and Kinross, have specific policies for how you would potentially get planning for a house in the countryside, and they are extremely hard. There's a very high hurdle. So if someone's thinking, there's a nice site, let's just buy it and figure it out later, that's a bad idea too. Do not do that. Right? Talk to me before you make a deal. Professional property developers will often make deals subject to planning. In the same way you or I might buy a house subject to survey. So they'll go to a farmer and say, there's 10 acres, I want to put 100 houses in that site. I'll give you £1 million on the day the planners give us approval. And they'll do a contract and they'll have a time limit, it'll be 2 years or something like that for them to go through the motions. And if they don't get it, no harm, no foul. The farmer's not out of pocket, but the developers paid thousands to have this looked at and it didn't work. But if it does work on the day, the £1 million changes hands.
Got you.
But that's not really available to regular folk going out to buy a house. That's just something you can do. So I've got a couple of other questions in here.
Okay.
So you've actually covered a lot of what I wanted to talk about here. So one of the great imponderables is when clients come to me and they have all these ideas and they want to build this dream house, etc. One, if not the most important thing, is money. What will their budget be? So there's a sort of chicken and egg scenario here. So Dave has this site for 100 grand he's going to look at buying. He has his house for 150 grand of equity and he's got 100 grand in the bank. And you say you can let him a package to get the whole thing built. But at what point in proceedings can you determine the most amount of money he would be capable of getting hold of right at the start?
Yeah.
Because if he comes and says, I've already got this thing designed out, and then discovers, in fact, either A, he can't get remotely as much money as he thought he was going to get, so the house has to get smaller, or B, he could in fact get lots more money, and he could have a much larger house. Mm-hmm. So again, the earlier the better.
Yeah, because although you're building your own house, the calculation is exactly the same as if you're buying a house. It doesn't make any difference.
Okay.
Because it's still all based on earnings.
Yeah.
So future value gets taken into account so that they make sure that they don't lend you too much next to the value of the house. So there's a safety net. Because all a lender is ever terrified of is if you get halfway through a build and go, no, I do it anymore.
Because that's so much worse than if you like repossess a house, you can sell it the next day.
Correct. So it's a project, so they always make sure there's a good chunk of equity in there to make sure they're safe. But it's still the same calculation. So if you come and sit in front of me and you say, I earn £20,000 a year, and I want to build a £500,000 house. And you go, excellent, how much money have you got to put in? None. So that's not happening. So it's a case of you can borrow what you can through your earnings. So if you've got a good enough salary between one or two people, it depends how many people are doing it, and it multiplies up, it goes at the calculator and comes out with an answer the same as. That answer changes, by the way, through time. The fact that interest rates at the moment, when we're talking right now, are going quite high, which means lenders are lending less because it costs more to borrow, so that the amount you can borrow is going down. So that conversation you have is fluid. But the point being, after the conversation, I can say to you, right, based on those earnings, you can borrow this. Now, this plus the money you've got, does it get us to? And you go, yeah, it does. You go, this will work then. They
can then take that to me and say, we have X for building a house. I can then design a house to suit that budget.
Yes.
You hope. So the other question I've got is drawdown. How does money get taken out of the mortgage? Does it happen in stages?
Yes, there's 4 stages. So there's foundation.
Yeah.
Right. So once the foundations are done, so if you own the land, then you haven't got a mortgage yet. So that's great. And then once you put foundations in, the value of that land with foundations is now worth more.
Mm-hmm.
So we can get you out. We'll use 75, but as I say, you can go up to 85. Take 75% of the value, that value out, and give you it. And that then funds you to get the next stage, which is to get the frame up. Once the frame's up, that land, that foundation and that frame is now worth more as a total.
So the asset is increasing in value as we go. So does that mean that our friend Dave has to stump up money up front?
Correct.
Right, this is the catch.
Yes, this is the question that people forget, is that when you get a mortgage to buy a house and you have a small deposit, that's great. But when you're building, you need lots and lots of, I can't stress this enough, you need lots and lots of your own money. You get it all back.
Yeah.
I mean, I hand on heart, had a client once who borrowed the money off friends and family to build a house. And then came to me and went,
how did that play out?
It was fine.
Okay.
Because he'd done it all, and he came to me and said, I've built my house, I owe £250,000 to family and friends to do this, but my house is worth nearly £1 million. And you go, what's your earnings? Do it through his earnings. And as soon as he got the habitation certificate, I remortgaged it, raised them 300, 250 went back to the family, and 50 did the garden and did it all up. So you can do that. You get it all back, but you need
cash up front.
You need it up, lots of it up front to get you to the point.
This other than the planning system, this is probably one of the reasons why you don't see that many people doing this. Yeah, it is quite unusual. I've been in business 14 years. I think I've been asked to look at doing a new build house 5 times.
Well, I'm 25, 26, 25 years doing mortgages, had hundreds of conversations, and I've actually done less than 5.
There you go. So, the grand designs people are probably the only people in the country who actually
are doing this.
Yes, it's extremely rare.
And the thing is that
everyone wants to talk about it.
Yeah.
But almost nobody does.
Channel 4's got a lot to answer for. But the other thing to consider, as I said earlier, is where do you live when you're doing this? Dave's got his house, right?
Yeah.
At some point, Dave's going to have to sell that house to get the money out because we need the money.
Yeah.
But Dave still has to live somewhere.
So he needs to
that has to be factored into account. So when I'm saying to the lender, here's Dave, Dave's doing this, and they go, where's Dave living, Pat?
Yeah.
Is he living in rented accommodation? Which is not an issue, but the lender then has to take into account his rent.
Yeah.
For that, pardon me. And if he says he's living on site in a caravan, great, there's no debt on that. But if you've got a family or you've got kids and you want to live in it and say, well, I'm living in a place that's £1,000 a month, you go, right, well, this bill is probably going to take 9 months, just as a number, right? If it takes 9 months and it's £1,000 a month, that's £9,000 you're going to spend on rent. Now, there's 2 ways the lenders look at that. The lender can then say, well, I can take that £1,000 a month off your salary, then multiply your salary to see what you can borrow, and obviously then you can borrow less because you've now spent £1,000 a month. Or if the client can then say, oh, it's okay, Pat, I've got £10,000, nothing to do with my build money, just £10,000 I'm going to use for my rent, the lender will then ignore the rent, because if you've showed them a bank account that says, here's 10 grand, nothing to do with my build pot, that's to pay my rent, the lender will then say, well, you don't have a debt anymore, so I can now use your full earnings. So you can get round things, but it's all about forward planning to do that.
Yeah. I should also say, as with any construction project, have a contingency fund. So even if you're like, if it doesn't matter, house extension, internal alteration, building a new house, doesn't matter. If you have a price and it's X, I would say keep at least at the absolute minimum 5%, but more likely 10% above and beyond for we found something. There's a delay, there's an expense.
The lender asks.
Right, they do they?
Yeah.
For new build houses?
It comes up when you're doing your self-build, and they'll say, right, so there's his, he knows what he's spending, and he's got this deposit which gets him that far. We're happy to give him the rest.
Yeah.
We're just checking, where's his contingency?
And how much do they look for?
The last time I asked me, it was 10%.
Yeah, I would say 10. 10 would be safe.
Just to be comfortable.
Yeah. The good, I mean, if you're altering an older building, which is 99% of what I do, the stuff that causes the problems comes up in the first few weeks.
Right.
They start demolishing, they start digging, they find, crumbs, there's a drain we didn't expect, or the foundation is completely cracked or missing, lead pipes, asbestos, rot, subsidence, all the horror stories.
That's terrible.
Oh yeah, they've all come up. They often come up together, and you have to spend the money, and there's no... But if that doesn't happen, and sometimes it doesn't happen, you can either pocket the money, or you can use it to buy yourself nicer stuff, nicer kitchens, bathrooms, tiles, flooring, all that good stuff right at the end of the project. So, but when it comes to building a house, if you're in a green field, stereotypically less can go wrong because you're not altering an older building. But that's not to say things won't go wrong or there's delays or whatever. These things happen. But yes, a contingency of 10% is healthy for a new build. It's very healthy for a new build. It would be normal if you're altering an older building. But so let's say we've had a good long talk with Dave, and Dave thinks, bugger this for a game of soldiers. This sounds like too much hassle. I'm going to extend the house I've got. So Dave has his house. It's £250,000 in value. He has 100 grand outstanding in his mortgage and 100 grand in savings, and he wants to spend £200,000. I've designed him a really nice extension. I've sold him on the idea it's going to cost 200k. Okay. What's the best way for him to go about getting this funded?
So then you're looking at securing more money against the property.
Yeah.
Right? So we know the property was worth, 450?
250.
250, and he's got 100 left, so there's 150 in there.
Yeah.
Needs another 100 out to add to the 100 he's got to pay you.
Yeah.
So depending if he's in a mortgage deal at that point. So
that doesn't is flexible and there's no fees.
So exactly, right? So if he's completely free and say, right, I'm not tied into anything, I can do what I want, then I can remortgage him, assuming he earns enough.
Yep.
If he earns enough, and we can remortgage him to 250 or 200, sorry, take him up to 200. That releases the 100 out to add to the 100 to do the work.
Yeah. Does the bank take account of potential future value?
Only about 2 lenders at the moment.
Right.
The rest of them don't, on the assumption that he doesn't do the work. Because remember, there's no legality to this. You can say to me, I need £100,000 plant, I've got £100,000 and I'm doing a £200,000 extension. You go, okay. And we get him in. Yeah, he doesn't do it. For whatever reason. Right. Something could happen in the family. This doesn't matter. But he's now got £200,000 mortgage in this scenario. So the lender...
How does drawdown work in that situation?
Oh, it just comes as a lump.
Right. So they just put that in his bank account. Right. That's a bit risky. You see, that's... Like, we should talk about this. This is a Council of Mortgage Lenders forum. And though I am legally competent to sign these things, I don't, because they are a lot of hassle, and I'll explain. So if you're building your new house, if Dave's building his new house, and Pat mentioned 4 stages, foundations, frame, roof, etc., whatever it happens to be, my job is to come along and sign one of these at each of these stages, and at the end, to say it's been built in accordance with the approved drawings and to a reasonable standard. Those 2 things, that's all. Nothing else. And when I send this off to the bank, even though Dave is paying me, I am liable to the bank, as it says, for lender on this. And it says on the back of it as well, the form should not be regarded as a substitute for defects liability insurance, such as that provided by NHBC, Premier Guarantee, Zurich Insurance, or similar. Because everyone assumes this is some sort of warranty, that I'm going to fix your lights when they start flickering, or the doors when they get stuck, or the drains when they don't quite work. But that's not what this is at all. Though Dave is paying me, I'm responsible to his mortgage lender only for this, for the purposes of lending. But the reason this came into being was in the late 80s, early 90s, there was a recession in the UK, and banks at that point did self-assessed mortgages for self-builders. So you could go to the mortgage lender and say, I'm going to build myself a 5-bedroom chalet, and I'm going to need £500,000 for this. And they'd go, okay, fine, you assess you, and off you go, there's your money. The recession happened, Pat stops paying, he hands back the keys, the mortgage company comes to take it, and lo and behold, it's a 2-bedroom bungalow, which didn't cost £500,000. Where's the rest of the money gone? Pat's sunning himself in the costume. So these things actually did happen, which is why this came into being. But from what you're describing and from what I've seen, no such thing exists when it comes to altering an existing house. There's no independent verifier goes to the mortgage to say, yes, they have in fact actually built this.
Correct.
So you could hypothetically swindle the mortgage company. You'd be stupid to do it.
Yeah.
But
but then again, you can raise money on a mortgage for just about any
for buying cars or other stuff.
Correct.
Yeah. So
legal purposes, what they say. But so in theory, if someone says to me, my house is worth 250,000, I owe 100 on it, and I'd like to borrow another 100. My first question is always, what do we want it for? I'm going to build an extension.
Yeah.
I've got money already, and I've got an idea it's going to cost. Now, if you're doing something like that, if I submit a remortgage application and say, I've got a client who wants to borrow £100,000 on his mortgage more, he's got £100,000 and he's building an extension. Usually the first thing they come back with is, what's he doing? Can we see plans on it?
Yeah.
Because it's not as if he's painting the kitchen or putting a conservatory on.
Well, if it's got planning approval, it would be in the public domain. There's a planning portal. Right. Every local authority.
So the lender, if you borrow that much and you're going to do that much structural work, the lender will just come back and say, "Can we see the drawings and the costings?"
Yeah.
Just as that, just to make sure. You go, and you hand it all over, and then as long as he earns enough and the remortgage goes through, when it goes to the new lender, they'll give him 200 grand. 100 will automatically pay off his current mortgage, and the other 100 will go into his chosen bank account.
Yeah.
Now, after that, that's it. There is no further contact from the lender to see whether he did it or not.
Yeah.
But they're happy because it's within the loan to value parameters.
Right, understood.
So they're comfortable with that. Now, as I say, if immediately after that something happens to Dave's family and he decides, I'm not going to do it anymore, and doesn't do it, then and keeps the money or spends the money, doesn't matter what he does with the money, then the lender's not lent him anything against something he might do.
Yeah.
Now, there are at least two at the moment that will, just in case it didn't work. So for argument's sake, if his house is worth 200 just now, not 250, 200, and he's got 100 on it, and he needs another 100 in the mortgage, and he's got 100, however, when he's finished, the property is going to be worth 550 or whatever, right? And then the lender says, well, I can't give you, 90% of my lenders will say, I can't give you that 100 because that's 100% borrowing and we can't do that.
Yeah.
But there are a couple that will say, well, what are you building? What are you doing? And what will it be worth? And then they look more in depth in it, obviously, and decide, we're happy with that. That would be comfortably worth that.
And do they check?
Yeah, they will, because it's simply based on, they're giving him money based on what he's going to do.
And how does that work? Who do they get to check? Is it a regular surveyor?
Yeah, just be a regular surveyor to go back out and make sure that it's been done.
So
they'll look at the plans. They'll do it similar to self-build, where the surveyor looks at the plans and goes, okay, I know what you're going to do. Give me a shout when you've done it.
Yeah.
And then he'll come back out and go,
I presume the fees for a mortgage like that will be higher because you've got more people involved.
Well, they are, but they're not. It's not astronomical.
Okay.
Because it's still major high street lenders that do it.
Okay.
It's not special.